right. Okay, so we're going to be looking at the Euro USD. I'm gonna be starting to look at it from monthly. If possible, I'll just go to the smaller time frames as well. But I'd like to really stick on to monthly because I'm seeing more opportunities on the monthly time frame. Firstly, we need to note, it should be noted that this market has been moving in this fashion where it gives us a pattern that resembles the pattern that we call a Quasimodo pattern. How so? Let's just label it this. First, what is that? It's our higher high. At this point, it's our higher high, right? However, if you compare it to the most nearest high, which will be that high, this is the higher high, and then this high will be the lower high, right? Now, if we're going down, we have lower low, lower high, lower low, and then after that, the market still went up. So what do we have here? We have a lower low, or for somebody, this could be something like a head. If you're looking at it from head and shoulders perspective, this is your head, right? Which is a demand zone. It's where the buyers should be coming into the market. And then what else? From here, the market went up there, and then from up there, it started to pull back towards this level. Now, if you note what is happening here, this area or this zone over here has been created from this pin bar here. It has been giving us good responses, buyers coming in at this zone. And this is what we call the Quasimodo level or the Quasimodo zone. CQML at this zone. And also now that is where you place your buy entry, buy limit. So you place your buy limit at this zone, right? Now that alone is just enough to tell us that we are going to go bullish quite strong with this pair. Now, another thing that we're going to look at is because we don't only look at just one confirmation. We need quite a number of confirmations. Now let's look at it. Look at this using Elliott wave. The trend continuation patterns, because this is also quite clear, easy also, that if we use a trend line, which is the diagonal resistance and support, we place our resistance line like that, and let's try and see if we will be able to copy this and just lay it across on the other side. Yes, so we need to just adjust it a bit, and then that's what we have. Now what do we have? We have our trend continuation pattern, which is a flag. Now, if you have learned from myself how to trade, you would know that whenever we are trading a flag, we need a number of things. We trade a flag the same way that we use the rules of trend lines, right? So how do we use the rules of trend lines? The rules of trend lines are simple. Whenever a support or resistance gets broken, either we enter aggressively as it breaks, or we wait for the consolidation. We either wait for the consolidation or a pullback, or what some people call a retest, and then we enter, and then we target. Our target is set based on two things. We set our target firstly based on the stick of that flag, because this is a flag, so this is the stick of the flag. So we can target the stick of the flag, or we can set our target to be the length of the flag. So we can target, once it breaks out, we can target that length, or we can just measure the length from the bottom to the higher high, and then we target that length on the other side, right? So as soon as it breaks out, we are targeting that length on that other side. Okay. So as soon as it gives us that breakout, we are taking that length. So it looks like it's still gonna go bullish for quite some time. It looks very, very rich. It looks like a very rich trade for us to take. However, we need to be careful, very careful with it. Right. Now that we are on monthly, we saw what is happening on monthly. Let us remove all of these. And now let's go to a smaller time frame. Maybe we can find other confirmations. Now, if we go to weekly, first thing to notice is this. We have this gap over here, right? And we know that the market usually has the tendency of filling up the gaps as it opens the gaps. So now here what we have is that the market dropped, gave us a very strong drop and a long-term drop towards that level. Now, it seems to be chasing this level of a gap over here. However, this pin bar over here has held this market quite strongly bullish because the market hasn't been able to go beyond this pin bar over here. It just kept going up and up. But right now, as you can see, it's dropping quite hard. So we might be having to get ourselves ready to drop because this could be our last drop, right? This could be our last drop. As this breaks out, we wait for the breakout also from this small candlestick over there. And then we go down with it towards that gap over there. And after we get that, then we are now targeting this market to go up the bullish direction. And if it goes up the bullish direction, we are going up to this candle first because we would have had this as our channel like that. You see? So we would have had something like that. And then from there, we are going up bullish. And once it breaks out, it will need to give us a pullback, which I'm assuming wouldn't be that much, and then goes up to that level because this is a Quasimodo level over here. As you can see, at that level, there were suppliers. So at this level, it's going to be a Quasimodo level, right? And then after that level, it should give us a pullback at least of 50% fib. Now, let's check according to the bigger time frames, what would be happening actually when that is happening. You see, when that is happening, that Quasimodo, it would be a breakout. So that 50% is quite valid now. It could come back towards here and then continue going up bullish because it would be retesting that breakout and then continue going up in a bullish direction, right? Right, now let's go to a smaller time frame on daily as well, just to see what is happening right there. Right. So what is happening on daily is this. We have this. Remember, we had this flag from the weekly time frame. We saw this flag on the weekly time frame. We identified that flag. Yeah, we identified this flag on weekly. However, let's just try and make it perfect enough. Right. Yeah. Yes. So we have this as our flag, right? So it's like A, B, C, right? So that's our 1, 2, 3, 3 waves pullback. Then after that, we are waiting for this market to drop even much harder. You see, after this, because it's failing to come back up there to this Quasimodo level, but we are waiting for it now to drop as it's doing here. I'm expecting it to break out of here and come down to this gap over there. Remember the gap? There is the gap. Remember the gap is simply there. So I'm just expecting this market to come down to this level, which would also be part of the harmonic patterns response, like that. So it would go down bearish towards the D over there, which is around the 1.08 thousand level. Right now, as you can see, if you look at how this market has been performing, it has been giving really good drops. Although it struggles to go bullish, but the drops have been quite strong. Like you can just simply tell from these drops, from the first drop, which was that one, it was strong, and then another drop, which was this one, strong, and then another drop, which was this one over here, strong. You see, these are like strong 1, 2, 3 strong drops, right? So from here we have this 1, 2, 3, 4, 5, 6, and then we have 7 coming down here. Then after 7, going up, bullish. Okay. All right, so that is my view on the Euro USD. You can hit me up on the Facebook page. It is the greatest market analyst. I'll just type it down here. Greatest market analyst. And it's the same as well on Facebook and on Instagram. It's the same thing. You can DM me if you want to know more about the markets. If you want to learn how to trade the markets with pure honesty and transparency, you can contact me if you want to learn. I emphasize that if you want to learn, please hit me up. But if you are in it for the get rich quick scheme ideas, then I'm definitely not your person. Thank you.